Hey guys, what's up and welcome to a new Tesla update video. Video's a little bit late today. I apologize. I did just get home, but nonetheless, let's go over not really that much to talk about in all honesty that we haven't already discussed, but nonetheless, let's go over it. If you enjoy, don't forget to hit that like button, but let's just jump into it. Tesla, believe it or not, a green day, which as I'm pretty shocker in my opinion, but up 1.22% compared to the market, though still once again an underperformance because the QQQ was up 1.44%, meaning that Tesla should have been up like 2.3% at least, I would say, right? So definitely a bit of an underperformance on Tesla yet again, but what else is new? However, the most important part to notice is the fact that at least, for what it's worth, we are currently bouncing off a potential, extremely important level that ideally I do want to see it bounce off of, and that's exactly what's happening. As you can see, this kind of descending bullish wedge. These are actually usually bullish breakouts, right? More often than not, these kind of wedges that get tight like this actually break up to the upside more to the downside. Now, that doesn't mean it has to break to the upside, but it is more common, or like a higher percentage, I guess, if you will, that it does go to the upside than overall to the downside. But again, in a market like this, guys, be ready for anything, of course, right? As usual. So I do want to make it clear that none of this is financial advice. Make your own decisions, your own research, all that stuff, right? But compared to what we saw yesterday, there's really not that much more to update, right? I mean, taking a look at the major things that we care about, the major indicators, right? The 21 EMO, we're still well below that. The Bollinger Band, we kind of bounced off the red line. The 50 and the 200 are still substantially above us. But then, of course, you have the 10 and the 5 that is still above us as well, unfortunately. So we're pretty much below all those, meaningful ones. And, looking at the weekly, there's one fairly important thing to notice. The 200 moving average is on the weekly is right below us, sitting at the moment at around $161.45, which we didn't exactly get to. And there is still technically a possibility we touch it. Doesn't mean we have to, but we are awfully close to it. And this, in theory, should provide as some pretty decent support overall. If we can, of course, get to it or get very close to it, which we pretty much have already, right? So breaking below this and starting to close weekly candles below this, in my opinion, would be quite bearish. So as long as that does not happen, we're not, in too bad of a spot yet, right? So of course, knock on wood, fingers crossed, of course, but that is something important to keep in mind, right? This 200 moving average on the weekly, very, very important to keep that in mind, right? But ultimately, guys, the way I'm looking at it right now, we can see we still have those beautiful bullish divergences setting up on the 4 hour and the 3 hour as well. The daily, naturally, right? The 3 hour, you can see it's much more obvious, right? As we're going up, the stock is going down. Our size going higher lows, stock is making lower lows, right? That's classic bullish divergence, as you can see pretty much on all these time frames, right? Very, very obvious stuff, which is good, which is a pretty decent sign. So ultimately, guys, I personally think right now it's a bit of a patience game, as it kind of was already in a way, it's sort of, I guess. But right now, the main thing that you want to be waiting for patiently and kind of, waiting to resolve is naturally going to be this descending wedge, right? So if we can break above, that's fantastic, right? So for a bear, pretty much what you want to do, or what you want rather, is to break not only below this kind of 166-ish level, but you want to go well below this wedge as well, which at the moment is going to get a little bit farther out. So pretty much anything under like maybe 163, I would say, is starting to get quite suspicious, right? And that would pretty much, guarantee that we're coming down to the 150s, right? On top of that, you also want to take a look at the indices. You can see the indices are overall, performing pretty decently, right? Like the SPY, for instance, you can see is actually closing at higher levels that we've had for pretty much quite a while, actually, ever since like way back when in like September. We're at the highest level since, right? So beautiful little ascending wedge that we are, or channel, I guess, that we are currently in. The VIX is just completely crashing, which is why selling puts right now, if you are selling puts against Tesla or something like that, doesn't seem very favorable, mainly because the VIX is just extremely low, right? The puts are just not really worth that much at the very moment, right? With the VIX being this low, unfortunately, for people that want to sell puts, or, if you're someone that wants to hedge and start to buy puts, well, the VIX being this low or potentially going even lower, the prices on those puts becomes a lot more appetizing, I guess to say, right? So that's something else to consider. The VIX is looking quite weak at the very moment. It feels like it just wants to come down to the 19s, is what it seems like, which could give the market a potential rally for the SPY, for instance, up to like at least 405, maybe even as high as 410, which is what I'm personally eyeballing at the very moment. If we get there, I might enter some puts on the SPY as a hedge, but of course, we'll see that. We'll see if it gets to that or not, right? Naturally. So yeah, that's kind of what I'm seeing at the very moment, ladies and gentlemen. Not a whole lot more to update that I haven't already talked about the other day. Again, the most important thing in my opinion, at least for now, for the short term, is of course watching this descending wedge play out and see where that takes us. And again, to the south side, pretty much want to see around 163 break, and that's good for the bears. not so good for the bulls unless you just want to buy lower. And on top of that, if you want to be someone that, you know, wants to go to the upside, you want to see a breakout to the north, I guess northeast, if you will, then you pretty much want to see a breakout somewhere, honestly, above 180. If we can get above 180, should be pretty decent resistance for now, right? However, if we can start closing candles above 180 once again, I personally believe that will be pretty bullish. But again, we have a triple resistance, right? We have a resistance just in general at 180, psychological, and, you know, previous support becomes resistance. We have a gap fill sitting exactly pretty much at 180. That was, you know, the other day on Friday, I believe it was, which will also serve as a resistance. And of course, we have the resistance overall of this potential wedge that we are still in. So we'll see. But this is the kind of, you know, one version of the wedge, right? The other version is a much more conservative version, which is of course going to be all the way out here, which in that case, if you want this one to play out, you pretty much want to start closing candles easily above 190, right? So that's something else to consider as well. But it depends on how you want to look at it and how conservative you want to be. But that's kind of what I'm seeing at the very moment. Ladies and gentlemen, let me know what you think down below. If you enjoyed the video, don't forget to hit that like button, and I'll see you guys as usual tomorrow for another update. Don't forget, Thursday is of course a closed day for the markets, Friday being a shorter day. So all that being said and done, thanks for watching. See you guys tomorrow. Peace.